have analyzed 66 years of stock market data to try to find patterns. Does it make sense to buy at a particular point in the year, sell at another point in the year? The findings are very interesting. Now here's the common wisdom. We just buy into the S&P 500 long term because it just goes up. We shouldn't care about the price at all. But this is only half of the truth. Because the S&P 500's appreciation is all due to monetary debasement. On average, the US money supply, USM2, grows by 6.8% per annum. If we did not have our money printer, then the S&P 500's long-term return is this here. So the S&P 500 divided by the US money supply since 1960. And of course, the current valuation is very comparable to what we had at the peak of the dot-com hype. But this is not what this video is about. This video is about finding patterns in the market. When does it make sense to buy versus sell within the year? Hi, my name is Gerhard. I've been in the investment game for the last 8 years. I hit my first million 3 years ago. And in this video, I want to share the data points that I look at in order to outperform the market. On average, I have outperformed buying and holding Bitcoin by 2% per month over the last 5 years. Of course, with some fluctuation, but it's the long term that counts, doesn't it? This is my crypto portfolio. But we are not talking about crypto in this video because everybody should be diversified. And we have seen this very clearly in the last 12 months as well. What I want to talk about is seasonality. How does the S&P 500 behave relative to the money supply over time? So we are looking at Bitcoin Strategy Analytics, the backtesting platform of this channel. We use the seasonality mode. We backtest the S&P 500 to the US money supply. And here is what we get. At the top, we've got the average performance. At the bottom, we've got the median performance. And you might have heard the saying, sell in May and go away. And that's actually not too bad advice. May tended to have pretty bad performance, so did June and August and September. Let's play with a thought experiment that in 1960 you already knew what are the good months, what are the bad months. And based on that, you're either betting on a rising price of the S&P 500 or on a falling price of the S&P 500. So this is a bit more refined compared to just sell in May and go away. We are also short in February, and in June, and in August, and in September. That's then the performance. So the S&P 500 versus the US money supply, that's the gray line. That's what we have already seen before. And the blue line, that's the adjustment for seasonality. And what we see at the bottom, that's our value of the portfolio over time. Now, why is this line at the bottom so interesting? It shows us how consistent seasonality is. Over the very long term, it tends to prevail. But there are stretches of roughly 20 years where we simply just get the same performance versus the S&P 500. So this is a very long-term strategy with some alpha. How much alpha? The answer is here, 3% per annum. So note how the S&P 500 relative to the US money debasement actually did not make much return, right? Only 0.67% per annum. The vast majority of the stock market returns happen through the devaluation of the US dollar. But those additional 3%, they are all market timing. Since this is a very long time frame, right, the 66 years, this 3% annual delta makes a difference in capital of roughly 7x over that time frame. So that's the monthly returns. We can also look at the quarterly returns and get the third quarter as being the worst by far. All other quarters made money, the third quarter did not. Now we could come up with all kinds of interpretations why the third quarter, or why say the summer period, is so weak for the S&P 500. We could talk about people selling their active portfolio because they go on vacation. We could talk about anything. All we can do is speculate. I'm just presenting the data. Now before I present the next result, if you were to look at, say, the day of the week, when do you think will we have the highest return versus the lowest return? Will Monday be the most profitable? Will Friday be the most profitable? What would be your intuition? And why do you have that intuition? Let's look at the result. Here it is. Monday tends to be by far the weakest. All other days, the S&P 500 tends to make money. Now this is over the entire period. Now check this out. The effect was extremely strong up until 1990, and then it suddenly turned around. Now again, I don't have an explanation for that. Maybe some quants have run the numbers and figured that out, and they exploited that pattern. Because what could be happening is that many retail investors, they look at their favorite stock, they maybe enter a purchase order over the weekend, and then they just buy for the market price, pushing up the performance on Monday. And so the quants, they might just be front running that effect now. Let's go to the day of the month. What will be most profitable? Here is the answer. The very first day of the month is the most profitable. Surprise, surprise. People are buying stocks with their paycheck at the beginning of the month. And then over time, as the money runs out, as there is more month than capital left, people are selling their stocks. But again, this was a very predictable pattern up until recently. And now the quants are taking advantage of that. They are front running the positive performance on the first of the month and moving this to the last of the month. And that's why the strategy doesn't work that well anymore. I think this is a very interesting study of how markets become more efficient over time. Now, I tend to focus on the crypto market, and the reason is it's less mature than, say, the stock market. The stock market is full with math PhDs that crunch the numbers left and right and that find those kinds of patterns and that then exploit those patterns. The competition in the crypto market is much, much lower. And so if we crunch the numbers over there, we tend to still get outperformance. That's why I'm focused on the crypto market. It's not necessarily because I'm a Bitcoin maximalist, because I think Bitcoin will rule the world. It's simply a market with a lot of capital with not much efficiency yet. If you're interested in getting access to this backtesting tool to run your own numbers for Bitcoin or for any other asset for that matter, or if you want to get notified when I do trading, or if you want to join the copy trading pool, where we are again on course to achieve our 40% per annum, then check out the premium membership. Link should pop up here on the screen. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.